forget the Fed for a second. A single, off-the-cuff comment from Donald Trump just sent shockwaves through the global energy market. As Wall Street tries to figure out its next move, is this the geopolitical bombshell that nobody saw coming? You need to hear this. Welcome to EPK Capital's daily market briefing for Thursday, October 16, 2025. Here's what you need to know as you prepare for your trading day. Global markets experienced a mixed session over the last 24 hours, buffeted by dovish signals from the U.S. Federal Reserve, ongoing geopolitical chatter, and a dose of significant corporate earnings. While tech stocks in the U.S. found their footing, European bourses stumbled. In the ever-volatile crypto space, Bitcoin continues to dance around key psychological levels, leaving investors on edge. Let's start with a look at the closing numbers for the major global indices. Global indices performance. In the United States, the tech-heavy Nasdaq Composite led the charge, closing up a solid 0.68% at approximately 24,890 points. The broader S&P 500 also finished in the green, adding 0.40% to close around 6,695. The Dow Jones Industrial Average, however, bucked the trend with a slight decline of 0.04%, settling near 46,387. Across the Atlantic, European markets ended the day with a more bearish sentiment. The FTSE 100 in London slipped by about 0.2%, while Germany's DAX and France's CAC 40 saw similar modest losses. In Asia, markets were largely upbeat. Japan's Nikkei 225 registered a gain, and India's Sensex and Nifty 50 both surged in early trading, buoyed by positive global cues. However, Hong Kong's Hang Seng Index posted a slight decline. Macroeconomic headwinds and tailwinds. The big story driving market sentiment was a speech by U.S. Federal Reserve Chair Jerome Powell. In remarks that were closely scrutinized by investors, Powell signaled that the Fed's aggressive monetary tightening cycle may be nearing its end. He hinted at a potential pause in interest rate hikes, and even the possibility of rate cuts on the horizon as the labor market shows signs of softening. This dovish tilt provided a significant boost to growth-oriented sectors, particularly technology, as lower interest rates increase the present value of future earnings. This comes as the latest Federal Reserve Beige Book economic report indicated a slowing momentum in the U.S. economy, further cementing expectations of a more accommodative monetary policy. Market watchers are now pricing in a high probability of a 25 basis point rate cut later this month. However, a note of caution was sounded by the International Monetary Fund in its latest World Economic Outlook. The IMF trimmed its global growth forecast, citing persistent inflation, the lingering effects of previous rate hikes, and geopolitical fragmentation as key risks. The report highlighted a divergence in economic performance, with advanced economies expected to see sluggish growth while emerging markets show more resilience. The ongoing government shutdown in the U.S. is also causing concern, delaying the release of crucial economic data, including the latest inflation figures. This lack of clear data is forcing policymakers and investors to navigate with a degree of uncertainty. In Europe, economic data presented a mixed picture. While some corporate earnings, particularly in the banking sector, have been robust, concerns about the broader economic outlook persist. The European Central Bank has maintained a cautious stance, with recent commentary suggesting that while inflation is moderating, the path back to the 2% target is not yet assured. Geopolitical currents and political commentary. On the geopolitical front, tensions between the U.S. and China continue to simmer. While there have been no major escalations in the past 24 hours, the rhetoric remains heated. U.S. officials have expressed concerns over China's trade practices, though they have also left the door open for further dialogue. In a notable development, former U.S. President Donald Trump commented on India's energy trade with Russia, stating that he had secured an agreement from Indian Prime Minister Narendra Modi to halt Russian oil imports. This statement caused a ripple in the energy markets, with oil prices seeing a modest uptick on the expectation of tighter global supply. Separately, India's External Affairs Minister, S. Jaishankar, delivered a speech at the United Nations troop-contributing countries' chiefs conclave. He emphasized the need for reform within the UN to make it more inclusive and representative of the current global landscape. While not directly market-moving, his comments underscore the shifting dynamics in global power structures. The Crypto Corner. The cryptocurrency market has been a hive of activity. Bitcoin is currently trading around the $110,000 to $111,000 mark, having seen a slight decline over the past day. Veteran trader Peter Brandt has stirred the pot with a prediction that Bitcoin could see one final significant dip, potentially to the $50,000 $60,000 range, before embarking on a new bull run towards its previous all-time highs. This has injected a fresh dose of debate into the crypto community, with some seeing a potential buying opportunity while others remain cautious. In major industry news, IG Group announced the sale of its small exchange to Kraken's parent company, Payward Inc., for $100 million. This move is part of IG Group's strategic push to expand its cryptocurrency offerings and highlights the increasing convergence of traditional finance and the digital asset space. Elsewhere, the price of Ethereum has been relatively stable, holding its ground amidst the broader market fluctuations. Sector spotlight and corporate movers. In the U.S. stock market, the semiconductor sector had a particularly strong showing, with the Philadelphia Semiconductor Index jumping after a positive earnings report from a major industry player. This reflects the continued investor enthusiasm for companies exposed to the artificial intelligence boom. Bank earnings also provided a bright spot, with several major financial institutions reporting better than expected results. This has been interpreted as a sign of consumer resilience in the face of economic headwinds. Looking ahead. As we look to the trading day ahead, investors will be closely watching for any further commentary from central bank officials. The absence of key U.S. inflation data will leave a void, making anecdotal evidence and corporate earnings reports even more significant in shaping market sentiment. The geopolitical landscape remains a key source of potential volatility, and any new developments in the U.S.-China relationship or the conflict in Ukraine could have a swift and significant impact on the markets. In the crypto world, all eyes will be on Bitcoin's price action to see if the predictions of a further downturn materialize or if the digital gold can find a solid base of support. That's your comprehensive market wrap-up for Thursday, October 16, 2025. Stay informed, stay sharp, and we'll see you again tomorrow for another look at the forces shaping our financial world. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice.